And to me, that was a negative divergence, because if you're at this lower price and you have that same level of hype, and we know what happened there, it's likely going to repeat here. And I still am in the camp that I don't necessarily believe the lows are in on Bitcoin.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
So there's really two components, and the first component is the AI craze, right? So, any company in their conference call when they report earnings that mentions AI automatically gets a bid. It's kind of the hot thing to talk about right now. Now, if we recall, we saw the same thing happen many times historically, right? Going back to the beginning of my trading career, if you just added a .com to your name in 2000 or 1999, you instantly became a $100 million, $1 billion company, right? It was just insanity because it was the advent of the internet. We've seen it happen with the marijuana stocks when they first came out. That was the hottest thing. The solar stocks, when they first came out, it was the hottest thing. So right now, this is the hot thing, and it's coming at the right time where there's a risk appetite, right? So we have a situation where we've seen Bitcoin rally almost 100% off the lows. We've seen the shit coins or the meme coins kind of rally off the lows with massive people just willing to gamble. And it basically tells you people are willing to take these risks again. So it feeds right into that thing of saying, hey, listen, has AI in the title. It's so sexy right now. Let's rip it to the upside. Let's buy it no matter the valuation.
No matter the valuation. And how do you feel about the valuation right now? I'm guessing you think it's overstretched?
Yeah, and there's no doubt about it, right? I mean, so if you just look at the metrics of it trading at the PE, the forward PE, even if they were to get what they're proclaiming they're going to get from AI in the next year, my guess is it's going to take 5 to 10 years to really build it out. But, the chart at this stage is in ludicrous land. The one thing to point out here is if we look at the chart, this candle right here, which occurred 3 days ago, that's called a topping tail. And again, when you have a topping tail where you have a tail on the top and a close in the lower portion, on a technical basis, that's a sell signal. As long as you do not close above the high, which was around 420, that again is a sell signal on the chart. So the chart is saying sell, the fundamentals are saying sell. Right now you have risk appetite, but my guess is that's going to fade when we start to see this economy slide more so into or towards a recession.
Whether you were placing a bet, would you be betting that it'll beat analyst expectations again next quarter because of this trend?
So in general, I would say they'll probably come in at or just slightly above expectations. But my guess is based on current valuation, the market's already pricing that in. And again, the market does a great job of pricing in what it expects, not what the CEO says, for instance. So the hype that's being built here, I think, again, it's based on the fact that you have a soft landing expected by many investors as well as economists. I don't foresee that. And I think you will see a glut of chips. I also think we have to recognize that there's a ton of semiconductor companies out there. I mean, it's not like you just have 1, 2, or 3. I mean, you literally have probably 50 to 100 semiconductors out there that are all going to be pouncing on this AI craze. And so sure, in the near term, it's great, but what happened to the solar industry? And I know you know this, David, is that all these solar companies overproduced, then China kind of flooded the market and it drove prices down. What happened in the marijuana industry? Marijuana companies overproduced, prices collapsed. So short term, yes, it's a great story, but for me, I'm on the side that, again, overproduction based on chasing this revenue will ultimately lead to lower prices and lower stock prices as well.
Maybe this growth we're seeing right now is a reflection of everything that needed to happen during the supply crunch. So
yeah,
perhaps
I also think that it's a lot to do with human psychology, right? I mean, everyone is just so insane about the AI craze that it makes them willing to pay up, much like people were paying up at 65 or 69,000 for Bitcoin because it had become such a cult thing to do. That's emotion. I don't trade on emotion. I trade on charts, reality, logic, all those fun things. And so that's where you have to step back as an investor, because investors that trade on emotion ultimately end up losing.
Let's take a look at the chart then of NVIDIA, and we can move on to some other stocks as examples. But let's take a look at this one first. If you were just to look at the chart, how overstretched is it right now based on the technicals?
Yeah, so based on the technicals, it's in this what we would consider the stratosphere, almost unparalleled in terms of history for such a large company. Now, you can have small mid-cap companies where they're much tinier, have great news, and they'll have these meteoric runs. But just to show you some cool technicals here, take a look at this, right? If we use a parallel and we do a parallel line down here, and we kind of do it in this slower range, look at what happens when we raise it up here, right? So you basically, if you go back to 2019, the lows on NVIDIA connected to the lows that we had in early 20 or late 2022, and you connect that to the high here, you basically are at the upper band of a channel, which again signals resistance. You tap into the daily chart with the topping tail as well. Again, doesn't guarantee it's topped, but for my world, it's all about probabilities. I want to be the casino. I don't want to be the gambler. And in this case, the casino is the higher reward or the higher success rate would be to the downside here.
Can we take a look at the Apple chart and whether or not that tells a similar story?
Yeah, it does to some extent. Now, Apple, again, is about 3 times the size of NVIDIA, but same kind of thing going on here where you've had this multiple months of expansion in terms of market cap. You look at all these green weekly, these are actually monthly candles. So 1, 2, 3, 4, 5, 6. You're on your 6th month straight of gains in Apple. If you look historically at the chart, here you could see a nice one, 1, 2, 3, 4, 5, and then it had a pullback. So again, betting odds are going to favor that this is due for a pullback, especially as you come into what we as technicians call a double top right here. And also, again, if you think forward and say, okay, is this market potentially headed for a recession? Is the economy headed for a recession? The Fed has even said it's going to be mild. I always say when they say something, it's always going to be a little bit worse than they say, like the transitory, and we know what happened with that in terms of inflation. So for me, this is, again, the odds are Apple probably pulls back off this level.
So
and to be fair, I'm short tech right here. I mean, there's to me, this is lunacy. Doesn't mean it can't go higher. That's why I never put all in on the first buy. I kind of inch in, but I am going long on beaten down plays. And this is where the contrarian mind thinks, right? It's when you analyze human psychology and you recognize people buying Bitcoin at 69,000, not because they believed in it, but because it was the thing to do. It was the hyped up thing. You're now at that stage with these semiconductors. You're at these stages with Apple and Microsoft, where again, the fundamentals don't align. It's just kind of people jumping over each other because they think it's easy money to make. And so for me, when I go to some of these charts, I want to show you guys this. This is really cool stuff. So I bring up charts and I say, all right, well, you know what? I'm not a follower. I'm a leader, right? And being a leader in investing is important. So when people chase, it's emotionally driven, right? And again, emotion ultimately gets us in trouble, whether it's in trading, investing, or in our lives in general, right? So the key is you have to look at it and say to yourself, what is the long-term value here? What is the reality of the situation? And when you're chasing, what you're hoping is it's the better fools, or whatever they say, the bigger fool model, right? Where you're hoping that someone else will pay higher, even though there's no valuation that makes sense, just because essentially you want to get rid of it after you jump in at a high level already. So for me, I don't want to be that. I don't want to be in that game. Why play that game when, again, it's an odds base? It's basically like going to the casino and playing a hand of blackjack. I want the odds in my favor. The way I get the odds in my favor is simply by finding good charts, discounted quality names into technical levels. I'm glad to be in these safer names. I don't need the adrenaline rush in my life anymore of maybe I make a lot of money overnight. No, a slow and steady, and I've done this, and I'll tell everyone out this. In my early career, I was just like everyone else. Put all your money in, try to double it overnight. And you know what? I blew up my account countless times. So now I've found that if I do the right thing and just stay slow and steady, it really does win the race.
Jerome Powell is doing battle with his own staff.
Yeah.
I'm guessing you agree with the staff more than Powell. That's my guess.
And again, this comes down to common sense, is that, if you're going to raise interest rates from essentially 0 to 5.25% in a very short amount of time, keep in mind, we're talking a little over a year plus at this stage, there's going to be repercussions. We've already seen it in the banks, right? And now what do we know that's happened to the banks? The banks have tightened their lending practices even more, which almost works like an additional rate hike or two. And so you have these situations where if everything was going to be fine, I don't think you'd see banks blowing up left and right. Think about the commercial real estate and what they're saying later this year that's going to be. I mean, that's something that no one on TV is really talking about, but that is something that investors need to pay attention to because it's going to put more stress on the financial system. Now, I'm not necessarily proclaiming that we're headed towards a depression in the near term. I don't think we are, but I do think that elevated inflation will remain. and it's going to keep the Fed on the sidelines, and the markets are banking. They're banking that if we do have a recession, the Fed will come save the day. And I think that time is past unless inflation gets back below 2%.
This is interesting because the NASDAQ, like we mentioned, continues to grind higher. We've got the big tech stock companies, like we talked about, just going to the stratosphere, and yet Bitcoin over the last 3 months has been more or less flat. That's a divergence from the NASDAQ. That's an interesting pattern. Yes, let's talk about that.
So you're 100% right. And in fact, that's a glaring red blinking light for us in crypto. And let me just put this in perspective. If you go back to 2021, NVIDIA was up 200%. Bitcoin went from, basically 20,000 to 65, 69,000, right? Same thing with other ones, AMD or a Microsoft or all of these, they were all running together. So it was a very clear risk on trade. You are not seeing that this time in Bitcoin. And what that means to me is, so I think there's a big disconnect with actually what investors want Bitcoin to be. Is it a risk asset? Well, sometimes, like we've seen, it goes up with tech, or sometimes it goes down when tech. For instance, today, right? Today, Bitcoin is down, tech is up. On the other side, we saw a few times where the banks were collapsing and Bitcoin went up. So is it a safety asset or is it a risk asset? Which one is it? And investors can't decide. And when investors can't decide, that is not a healthy place to be in the market. So again, the biggest thing to me is this chart continues to hold underneath 30,500. You've got bearish consolidation starting on this chart. We break this 25,900 level. You're going to get a leg down probably to about 24 to 23,000, which is your next support. And I will say this is that the hype when we were at 30,500, people were going nuts. I even commented, I think to you in one of our interviews, that it was reminiscent of the hype that was at 69,000, the same sort of buzz. And to me, that was a negative divergence, because if you're at this lower price and you have that same level of hype, and we know what happened there, it's likely going to repeat here. And I still am in the camp that I don't necessarily believe the lows are in on Bitcoin just yet.